Welcome friends. In today's video we will be seeing a very important topic, at the same time a topic which has divergent views and is considered as a gray area under GST currently, which is ITC eligibility on CSR expenditure. So far there has been divergent rulings pronounced by the AARs under the GST regime on whether this should be an eligible credit or an ineligible credit. So we will look into what are those divergent rulings and what has been discussed in those rulings, and also few other points that has to be kept in mind when we take a position on the eligibility of ITC on a CSR expenditure. So first of all, which company has to incur or spend on CSR expenditure? This is mandated by the Companies Act for those companies whose net worth is 500 crores or more, or whose turnover is 1000 crores or more, or whose net profit is 5 crores or more. If any of these conditions are satisfied, then the Companies Act, Section 135 of the Companies Act, mandates compliance with the CSR provisions. So the company has to spend at least 2% of the average net profits made during the three immediately preceding financial year to comply with the CSR provisions. Also, the Companies Act says that in case there is a non-compliance with the CSR provisions, then the company can be punishable with fine not less than 50,000, which can extend up to 25 lakh rupees. And not only that, every officer of the company who is in default shall be punishable with the imprisonment for a term which may extend to 3 years, or with fine which shall be not less than 50,000 but may go up to 5 lakh rupees, or even both imprisonment and fine. So this is the consequence and applicability of CSR under the Companies Act. Now, let's say a company incurs CSR expenditure as per section 135 of the Companies Act. In this scenario, the company might incur GST on various inputs and input services that it has procured or spent to comply with the 135 of Companies Act, and in this process it would have paid ITC or input tax. Whether that input tax is allowed as a credit on such CSR expense is what we will be discussing in the subsequent slides.
So the first case we'll be looking at is Polycab Wires Private Limited, which is a Kerala advance ruling which came in the year 2019. So in Kerala, there were floods due to which the state faced a severe power outage, and there were flood affected areas across the state, due to which the Kerala Electricity Board requested the distributors of Polycab to supply electrical goods on a free of cost basis. So Polycab, basically a dealer of electric goods, cables, etc., have instructed their distributors to give all the electrical goods to the electricity board on a free of cost basis. So based on the instruction, the distributor has supplied the goods to the electricity board on a free of cost basis by raising a tax invoice where it has put the value with tax, and it has provided a 100% discount. So net to net, the goods have been given to the Kerala Electricity Board on a free of cost basis. However, the distributors ensured that they have paid the GST on such supplies to the government. Now, the distributors have raised a reimbursement bill to Polycab with regard to the goods which were sent on free of cost basis to the electricity board, and the same were reimbursed by Polycab. So this was accounted as donation given in kind by Polycab in their books. However, in addition to this, the Polycab has also supplied wires, goods and other electrical items on a free of cost basis directly to the people who were affected by flood in the state. Now, this has been considered, or this has been booked as a CSR expenditure for the purpose of section 135 of Companies Act. Now the question before the advance ruling authority is, there are two questions. One, with regard to the supply made by the distributors to the electricity board, are they supply under GST? If so, on what value the tax has to be paid? And with regard to the ITC for the distributors, will they be available since this has been given on a free of cost basis to the electricity board? Additionally, the second question that has been raised is whether Polycab will be eligible for the ITC on the CSR expenses it has incurred. Now, the distributor's contention is that the GST liability is completely paid on such free supplies and therefore they are eligible for full ITC on such supplies. The revenue has observed that the distributors have raised a FOC invoice to the Kerala Electricity Board. However, they have discharged the tax payable on such supply to the government and they have raised a reimbursement claim with Polycab. So, this is a transaction where the consideration is not wholly in money and hence Rule 27 has to be applied to value such transactions, and open market value of this transaction should be considered as the value. If open market value is not available, then the consideration in money plus the consideration equivalent money value will be considered as the value of supply. And since the supply is taxable under GST by way of Rule 27, the corresponding ITC for that supply will also be available to the distributors and hence it will be allowable to the distributors. Hence, the first question was answered in favor by the advance ruling authority. With regard to the second question, where Polycab directly supplied wires etc. on a free of cost basis to those who were affected by flood, whether ITC was eligible on such CSR expense, the authority mentioned that Clause H of Section 17(5) explicitly covers goods which are lost, stolen, destroyed, written off, or disposed of by way of gift or free samples. And expenses like this, where which goods are given on a free of cost basis, will be covered under this clause and it can be considered as gifts given by the company, and hence ITC should not be allowed on such CSR expenses, was the conclusion given by the advance ruling authority in the case of Polycab Wires Private Limited. So we just saw a ruling by the Kerala Advance Ruling Authority which came in the year March 2019. Now there was a second ruling which came in January 2020 by UPAAR in the case of Dwarike Sugar Industries Limited. So Dwarike Sugar Industries are a manufacturer of sugar and allied products. Dwarake Sugar Industries had incurred CSR expenditure on construction of schools and free supply of furniture to schools and free supply of electrical items to schools and also free supply of goods to NGOs to comply with the CSR provisions under section 135 of the Companies Act. So the question before the advance ruling authority is ITC allowed on such CSR expenditure incurred by Dwarikesh Sugar Industries? The applicant also mentioned that Section 2 subsection 17 of CGST Act, which defines business, includes those activities which are incidental or ancillary to the main activities. Hence, the applicant mentioned that CSR expenses should be considered as incidental or ancillary to the main activities, and hence the business definition covers such expenditure. However, the advance ruling authority wanted to ensure whether they are incurred in the course or furtherance of business, which is a prerequisite as per section 16 of the CGST Act to avail any input tax credit. For this, certain jurisprudence cases were referred. In the case of SL Propack Limited in the pre-GST regime, the Mumbai Tribunal had held that we observe that any company who meets the criteria for CSR is mandatorily required to incur in CSR activities to be in compliance with the Companies Act 2013. and non-compliance of these provisions may lead to business disruptions, and hence these were considered to be incurred in the course of business only. Similarly, in the case of Millipore India Private Limited, the Karnataka High Court held that it is to discharge the statutory obligation when the employer spends money to maintain their factory premises in an eco-friendly manner. Certainly, the tax paid on such services would form part of the costs of the final products, and hence it has to be considered as an input service under the service tax regime. Therefore, the advance ruling authority in the case of Dwarike Sugar Industries held that, in view of this, we observe that the application is compulsorily required to undertake CSR activities in order to run its business, and accordingly, it becomes an essential part of its business process as a whole. Therefore, the said CSR activities are to be treated as incurred in the course of business. Therefore, in this ruling, the authority mentioned or agreed that such expenses are incurred in the course of business. Although the advance ruling authority agreed welcomingly that a CSR expenses are incurred in the course or furtherance of business, in the case of Dwarike Sugar Industries, it was important to validate the eligibility for each of the expenses. Reason being, construction of schools was specifically blocked under Section 17 subsection 5. Not only construction of schools, any such construction works contracts are specifically blocked except when it is used for the same line of business. Hence, it was imperative to validate each and every expense that was incurred. With regard to the free supply of furnitures, electrical items and goods, the Advance Ruling Authority also referred to clause H of 17.5, which deals with goods lost, stolen, destroyed, written off or disposed of by way of gift or free samples. So this is nothing but the same clause we saw in polycab wires, where the authorities in polycab wires held that CSR expenses are gifts and ITC was not allowed. Hence, the moot question in this case was whether such CSR expense would be considered as gifts. The Advance Ruling Authority wanted to make a distinction in this case, and uh, a distinction between gift and a CSR activity, because in common parlance, gift is provided to someone occasionally without consideration and is also voluntary in nature. However, in a CSR activity, it is the applicant's obligation to incur such expense in order to be compliant with the law. Since CSR expenses are not incurred voluntarily, accordingly we are of the opinion that they do not qualify as gifts, and therefore its credit is not restricted under section 17 subsection 5 of the CGST Act. Therefore, Dwarike Sugar Industries Limited gave a favorable ruling with regard to eligibility of ITC on CSR expenditure. However, in the case of construction of schools, the Advance Ruling Authority referred to Rambagh Palace Hotels Private Limited, a Rajasthan advance ruling, where uh, the Advance Ruling Authority mentioned that in general, ITC on construction is not available for reconstruction, renovation, addition, alteration, or repair of an immovable property, even when such goods or service or both are used in the course or furtherance of business. However, the limitation in such a scenario is the extent of capitalization. Section 17.5, Clause C and D of the CGST Act has specifically restricted the ITC on construction or works contract service to the extent of capitalization. Accordingly, we observe that the ITC of goods and services used for constructions of school buildings will not be available to the applicant to the extent of capitalization. However, in CSR, it may not be capitalized, and hence to that extent ITC could be allowed, was the ruling given by the Advanced Ruling Authority, the UP Advanced Ruling Authority, in the case of Dwarike Sugar Industries Limited. So, as we can see, there are two different advanced ruling authorities who have given divergent views for the eligibility of ITC on CSR expenditure. Now, in the summary, we can see that in the case of Polycab Wires Private Limited, the Kerala AAR in the year 2019 concluded that CSR expenses are gifts and should be restricted under Section 17(5) and ITC should not be allowed. However, in the case of Dwarike Sugar Industries Limited, the UPAAR in the year 2020 made distinction between gifts and a statutory obligation as a CSR expenditure and mentioned that ITC will be allowed in such situation and it will not be considered as a gift given by the supplier. So there are few other points that can be noted when discussing about ITC on CSR expenditure. That is, section 17 subsection 5, that is the block credit section, starts with a non-obstante clause to say that notwithstanding anything contained in subsection 1 of section 16, therefore, whether or not it can be incurred in the course or furtherance of business, if it is covered in section 17 subsection 5, then it could be considered as an ineligible credit regardless of the fact it can be incurred in the course of business or it need not be incurred in the course of business. If it is subjected to any of the clauses in subsection 5, then it can be considered as an ineligible item. Further, section 2 subsection 47 exempt supply definition means supply of any goods or services or both which attracts nil rate of tax or which may be wholly exempt from tax under section 11 or section 6 of the CGST or IGST Act and includes a non-taxable supply. What is a non-taxable supply? A non-taxable supply means a supply of goods or service or both which is not leviable to tax under this act or under the IGST Act. It is to be noted that uh, when anything is given free of cost, that is without consideration, such supply will be considered as a uh, not leviable to tax, because in the absence of a consideration something cannot be taxable under the GST Act and hence it can be considered to be a non-taxable supply. If it is considered as a non-taxable supply, then it is also an exempt supply because 247 includes a non-taxable supply and hence ITC can be restricted to the extent of such non-taxable supplies as per section 17 subsection 2, which says that ITC should be taken only to the extent of taxable and zero rated supplies, and ITC towards exempt supplies are to be reversed or restricted. So this was a ruling given in the case of Page Industries, where the advanced ruling authority held that supply of marketing or promotional items will be covered under such exempt supplies and ITC on such items should be uh, blocked or restricted. So if the same analogy has to be applied for CSR expenses, then probably without being subject to section 17(5), it can still be restricted under section 17 subsection 2. However, these are still at only a nascent stage, although we are 4 years into GST. There is no amendment or clarifications that have come straightforward to mark a distinction whether ITC is eligible or not eligible. Meanwhile, we have tried to cover certain key rulings and important points to ensure that an informed decision is taken on whether ITC has to be availed on the CSR expenditure. The Page Industries case law has also been covered in one of our previous videos. The description, the link of which will be provided in the description. So I hope this session would have been very useful. And another interesting question is also, what if more than 2% is contributed towards the CSR activity? That is, a voluntary contribution is made. So a 3% is incurred. So the remaining 1% is not a obligated or mandatory expense. Will this be considered as not incurred in the course of business, and this can be restricted as ITC in section 16 itself? So these are also another gray areas which are yet to be answered. So I hope this video would have been very informative and useful. So if you had liked the video, please like, share and subscribe, and please feel free to share your comments and feedback in the sections in the comment section below. And also I would like to hear from you guys what more kind of videos you expect, so I can try my best to bring those changes in the videos. So thank you. We'll meet in the next video next week.